Welcome back to the deep dive. You know that feeling when a story just blows up, everyone's talking about it, but you're kind of thinking, why now? And what's the real takeaway? Well, today, we're diving right into one of those, Bitcoin. Its huge surge past previous record highs. It's more than just a number. Feels like a real shakeup. So our mission today is to take this stack of sources you've shared, articles, market analyses, all the regulatory updates, and sort of boil it all down. We want to give you the clearest possible picture of what actually pushed Bitcoin up this high, and maybe more importantly, what it really signals for, the wider financial world and maybe for your own portfolio if you're in this space.
Exactly. We're definitely going beyond just the headlines here, trying to uncover the deeper forces at play. It's not just about the price going up, it's about connecting those dots, right? Between, say, monetary policy shifts, what big institutions are doing, and how the whole regulatory picture for digital assets is changing.
Okay, so let's start there. Let's just paint a picture of this record-breaking climb.
Yeah.
Our sources show August 14th, 2025. Bitcoin didn't just edge up, it soared. Can you give us the numbers? Like, how big was this jump?
Yeah, it was significant. On that day, Bitcoin climbed as much as 0.9%. Now, that might not sound like a huge percentage,
Right.
but it hit a new record high of US $124,002.49 in early Asia trading. So, almost 1% on an asset over $124,000. That's a big move in dollar terms. Over $1,000 gain. And it beat the previous peak from back in July. And it wasn't just Bitcoin either, Ether, the second biggest crypto.
Hmm.
It also hit US $4,780.04. That was its highest level since late 2021. So broad strength.
And zooming out a bit, this isn't just a one-day wonder, is it? I mean, the whole year has been pretty strong for Bitcoin.
Oh, absolutely. Bitcoin's up nearly 32% just so far in 2025.
Wow.
Yeah. So that really shows a strong, consistent upward trend this year. A real shift in maybe market sentiment.
Okay, so the big question then is why? Why now? What are the main drivers, the tailwinds our sources are pointing to that are powering this rally?
Well, the analysis seems to boil it down to about three main interconnected things. First, there's increasing certainty or expectation, maybe, of U.S. Federal Reserve rate cuts. Second, sustained buying from big institutions. And third, some pretty crucial policy moves from the Trump administration aimed at making it easier to invest in crypto.
Let's break those down. The Fed first. How does the expectation of rate cuts fuel something like Bitcoin?
Well, it's kind of interesting. When the market expects the Fed to ease up, to cut rates, right? Traditional safe assets like bonds, they often offer lower returns. So investors, especially the big institutional ones looking for yield or maybe a hedge against inflation, they start looking at other places. And crypto can become, an attractive option in that scenario. It behaves differently than stocks and bonds sometimes.
Okay, that makes sense. And the second point, that's sustained institutional buying. You mentioned big names getting involved.
Indeed. And this is really key. It's not just about like dipping a toe in anymore. We're talking about major asset managers. Think BlackRock, Fidelity.
Right, the giants.
Exactly. They're already running crypto exchange traded fund, ETFs,
Yep.
which make it way easier for regular investors to get exposure through the stock market.
Yeah.
Their involvement and the success of these products, it sort of legitimizes crypto for potentially trillions in managed money. It signals a big shift, opens the door wider for capital that might have been hesitant before because of regulations or perceived risks.
And I guess the overall market size reflects that influx of big money, doesn't it?
Oh, definitely. If you connect the dots, the whole crypto sector's market cap, it's ballooned massively. It's now over US $4.18 trillion. For perspective, back in November 2024, around when Mr. Trump won the presidential election, it was about US $2.5 trillion.
Wow. It's nearly double.
It's a huge jump, shows a massive amount of capital flowing in and growing confidence, clearly.
Which leads us nicely into maybe the most charged factor here, the regulatory side, particularly President Trump's influence. The sources really seem to emphasize his administration's role. What's the story there?
Yeah, the sources definitely highlight that. They suggest Bitcoin's rally is, well, significantly backed by regulatory wins the sector has been wanting for a long time, happening after President Trump returned to the White House. He's even called himself the crypto president, And his family has apparently made some moves into the sector, too. And just to be clear here, we're simply reporting what the source material is saying about his impact. We're not endorsing any particular political viewpoint.
Understood. So what were some of these specific regulatory wins, the ones that maybe moved the needle this year?
Okay, so according to the sources, a key one was an executive order just last week, August 7th, 2025. And that apparently paved the way to allow crypto assets in 401k retirement accounts.
401k, wow, okay. That's mainstream.
That's a big deal, right? These are the core long-term savings plans for millions of Americans.
Wow.
So putting crypto in there is a major step towards integration. And beyond that specific order, the sources say crypto scored multiple wins in the U.S. this year. Things like passing stablecoin regulations.
Rules for those dollar-pegged coins?
Exactly, governing those. And also a significant move by the U.S. securities regulator, the SEC, to sort of overhaul its rules to better accommodate this whole asset class, which is evolving so fast.
So you've got this growth, you've got the big institutions coming in, you've got political backing.
Yeah.
It really sounds like crypto's moving into, well, much more traditional financial territory.
Hmm.
But putting it into retirement accounts, I mean, those were meant for long-term, ideally stable growth. That feels like a huge step. What about the risks? Did the sources talk about that side?
They absolutely do, and it's a really important question because while this push into things like 401k, it can create new opportunities, sure, for investors, for the asset managers, but the sources are very clear. They use the phrase peppered with risks.
Peppered with risk. Okay.
Yeah. And the main worry, it's volatility. Crypto assets just tend to have much bigger or much more frequent price swings compared to traditional stuff like stocks and bonds. You know, the things managers usually rely on for those long-term accounts. So you can imagine a sudden, sharp downturn in crypto. That could hit someone's retirement savings much, much harder than a typical dip in the stock market.
Right. That tension between the potential upside and that volatility risk is really stark there. And yet, despite these risks, despite maybe shifting policies elsewhere, this rally seems to have some serious legs of its own.
It seems so. Yeah, the sources indicate Bitcoin's surge has kind of lit a fire under the whole asset class over the last few months. And what's really interesting is that it seems to be largely shrugging off other big economic policy moves from the administration, like Mr. Trump's various tariff policies.
Huh. So it's almost like the crypto-specific drivers are outweighing those broader economic concerns right now.
That's what it suggests, yeah. That the underlying drivers we talked about, the Fed expectations, the institutional flow, the regulatory easing are just really strong right now, giving the rally a kind of resilience.
So given all that,
Yeah.
the regulations, the institutional money, this market momentum, are there any expert predictions in the sources about where Bitcoin might go next? Any price targets being thrown around?
Well, there is one mentioned, IG market analyst Tony Sycamore. He noted that, technically speaking, if Bitcoin can sustain a break above the U.S. $125,000 mark.
Okay, a key level.
Right, a key psychological and technical level. If it holds above that, he suggested it could propel Bitcoin towards U.S. $150,000.
$150,000, wow.
Yeah, so analysts are definitely watching these price levels very closely. They see them as potential triggers or indicators for the next leg up. It's not just about hitting the high, but staying above those important thresholds.
What an incredible deep dive. Really unpacking the forces shaping crypto right now.
Yeah.
From, what the Fed might do to actual presidential orders and just seeing that massive market cap surge. It really feels like we're watching a pivotal moment for digital assets.
Absolutely. It really shows how a confluence of different factors, policy, investor feeling, tech innovation, huge capital flows, how they can all come together to drive really rapid, almost explosive change in financial markets. It's incredibly dynamic.
So as crypto keeps marching into the mainstream, pushing into sensitive areas like retirement accounts, it kind of leaves us with this really provocative thought, doesn't it? In this world that's getting more and more digital, how do we as people, as a society, how do we actually navigate this? How do we balance that undeniable pull of potentially huge gains with the very real volatility and the inherent risks of an asset class that's still evolving so quickly, especially when we're talking about something as fundamental as our long-term financial security?